Welcome to the Captain's Blog. I am David McDonough, Senior Vice President at Trilogy Financial. On this blog, we try to take what's unnecessarily complicated way back here in Wall Street, make it understandable to you on Main Street. Down fractionally last week, still up 1% for the year. What happened last week? Financials came out with solid earnings and talked about you as the consumer having a strong balance sheet. But in the midst of that, we had the president talking about investigating Fed Chair Powell. He wants him to cut rates, yet he's investigating him. On top of that, they talked about capping credit card rates at 10%. Intuitively, it sounds good. More money in your pocket. Less money to borrow. If you're out there trying to apply for credit, you're less apt to get it. So on top of all of that, going into a holiday-shortened trading week, again, up 1%. But the rotation is continuing. I talked about this in December. Rotation out of the FOMO stocks, the hot stocks, into value, energy, smaller companies. That did happen last week. Did that rotation continue, or did the profit-taking ensue? Here's your week in review. As of this print, the market is down fractionally. What happened? We came in on Tuesday, a 10% tariff threat to the EU if they didn't back the president's plan with Greenland. But then on Wednesday, a framework of a deal was established. The market came back 1.5%. Again, down 2% on that day, one of the worst days in 6 months. But this is the buy the dip moment, as I continue to talk about on this blog. Again, fundamentals are strong. Consumer balance sheets are strong. These tweets give you an opportunity to buy some of these names on dips. I do feel that this isn't over where it comes to the trade war with Europe. It's called sell the America trade. And again, but these are opportunities because of solid fundamentals to buy on dips. And here's what to look for next week. Geopolitical risk. And next week, it's the Fed risk. What do I mean? Again, Fed interest rate cuts are priced into this market. We do not expect a rate cut next week. We do expect the Fed Reserve to say that they will be data dependent. And recently, the data is showing that inflation has stabilized, yet coming down. But what is weakening, is the labor market. The Fed has a dual mandate: full employment as well as low inflation. I believe that this market is pricing in at least one, if not two, rate cuts by May. Here's your personal finance tip of the week. It is easy to buy a position or a stock. It is not easy to sell. What do I mean? When you start your asset allocation, you have a 5% position, and some of these names have grown to 10%. It makes sense, in my opinion, to trim that position and rebalance. And it's not easy to walk away from that table and see another win. But I'll say this to you: the winning stocks in December are not the winning stocks now. Look at how you're titling your accounts, especially individual joint accounts at the bank. Folks, TOD, transfer on death. Decide from the grave before a judge takes that will and takes 9-12 months for the beneficiaries to get it. And lastly, class, what do we look at when we talk about the broader market? Is it the Dow Jones? The answer is no. 30 stocks. One of those names today, Intel, is going to be down 10%. I'm not telling you to buy or sell that name, but when it's 1 out of 30, you'll see that the Dow is down more than the S&P 500, which is the correct answer. So thanks again for checking in. We'll see you next week on the Captain's Blog.